Hello, everybody. Welcome to my first trade recap of this week. So yeah, we start with the DXY. At the beginning of the week, I looked at the DXY, the US dollar currency index, and I saw this weekly bullish candle closing at the beginning of the week. So we started then here. And yeah, this is a bullish sign for me that the bulls are present there. So I can look at the daily now. So I went to the daily. At the 19th, we opened that weekly bullish. We closed that bullish candle close and we opened another one. And then I saw here this possible bullish M, the first, the second leg, the third, the fourth, and a possible fifth. And we did that. So we just didn't tap our 61.80. That's no problem. But I expected some bullish momentum at this kind of region. So what we can see then is, okay, I went till AUDUSD because that pair I had in mind because the DXY is bullish. So if the DXY is bullish, we expect US dollar to be strong and the other pairs against it bearish. So I went till AUDUSD. I will do it like this. And I went till the weekly chart. And what I saw on the weekly chart, we had that weekly bearish candle close. So I went till the daily. And at the daily, what we could see here is we had here that first leg, second leg, then the third leg, fourth leg, and then that fifth leg to go potentially to the daily TP. Okay, so I drew my daily zone of interest, which is at this daily institutional candle here, which is aligning with this kind of support here, and then here the resistance that we had. So nice supply and demand zone. And yeah, that institutional candle, I like to draw it just on that whole candle, the daily zone of interest. And what we could see then on the 4-hour was that diesel forming. So once we hit the daily zone of interest, we begin to count 1, 2, 3, and then the fourth diesel candle, we need to have the first bearish candle close. We had this at this zone, so 1, 2, 3, and on the third candle close, we could set our limit at this diesel box. So I set at my limit, my stop loss for around 4.2%, 4.1, because my entry was a little bit higher. So yeah, and then we went to the daily TP. I took it with 0.5% because I had that week some bad news in my family that came out. So yeah, I was emotionally a little bit not focused at the time. I was at my work and stuff and not focused enough. So yeah, I took it with 0.5%. So I have a netto gain of 1.9 in profit on that trade. So we went till the day, the 4-hour TP. I took there 1/3 out, and then I took all the parcels out at the daily TP. So yeah, then the second one is EURGBP. So I went till the weekly chart. What we can see on the weekly chart, we are at the weekly bullish impulse. We had that weekly bullish massively candle close. So I looked at the daily chart, and what I can see on the daily chart was that we had there a nice bullish M. So we had here that first candle, second leg, sorry, first leg, second leg, third leg, fourth leg, and then the potential fifth leg to the upside. And we went straight to the minus 60.80 of the daily. And I took normally profits on the daily minus 27. So what I did here on that trade, I went till the 4-hour then because I had here placed my daily zone of interest at the 61.80 because this is my first point of structure. As you can see on the line chart, this is my resistance level that can become support. If I go now back to the candle chart, you can see that nice candle retesting that daily zone of interest, aligning with that daily ascending trend line here. First touch, second touch, third touch, impulsively to the upside. So then I went till the 4-hour. What I could see on the 4-hour, I will just do it like this. So yeah, what I could see on the 4-hour, we touched our daily zone of interest. So I wanted to see a nice pattern. So what we had as pattern was the shoulder 1 here. Then the head with resistance candle in our head, which is nice. This is then a supply and demand zone. support, resistance, support. Nice. So I drew my Fibonacci from the low till the high here. We went till our shoulder 1 zone of interest at the shoulder 1, then the shoulder 2. Then my limit was set, stop loss below this beginning of correction, because there is also some liquidity which took it here for more upside momentum, this subtle wick there. And then we went straight till the daily TP like this, the daily TP here for around 6.1%. I took my first partials out at the 4-hour TP for around 2.7%, 33% out. And then because I wanted to close the week, I took it at the beginning of correction here at the minus 60.80. This was around this region here. I took all of it out. Normally I will let it run to the daily TP, but I took it now out to have some nice profit at the end of the week. So this was a netto gain of 3.4% of me for that trade. So that's nice. Then the next one, GBPAUD. On GBPAUD, what we can see on the weekly chart, if I do it like this, I will move it like this. Yes. So on the weekly chart, we could see we had a weekly bullish candle close, but we did a retest of the weekly highs. So this is a high selling zone. As you can see, this is an institutional candle. At the weekly highs, we had some bearish pressure. So we needed to take that in count for our to take more aggressively take profits. So if I go to the daily chart, what we can see on the daily, we had here that natural M. So at the daily, we saw here that same highs, as you can see. So we expect same lows, which we retested on. So if we touch our daily zone, we could look for a 4-hour pattern. So what I could see on the 4-hour, we had a touch of the daily zone of interest of that natural M on the daily. So we went to the upside, we closed here, and then we touched our 4-hour previous highs here. So what we can see is then a 4-hour inverse head and shoulders without a break. So I took my Fibonacci from the low here till the high, like this. I will just do it like this. So I took my Fibonacci from the low till the high, and I want to take my trade at this shoulder 1 region here, like this shoulder 1 region. And my limit was set. I was at my work back then. I had the morning shift, and we went till the upside before we went to our entry trade. And what I saw then was, okay, on the daily, we had here that possible inverse head and shoulders that is against us, like this. We have that shoulder 1, this head, shoulder 2. We touched this first before we entered our trade. So I saw at my work, my entry was triggered. We had an impulsively move till this daily zone of interest. So the bears kicked in at this daily zone at the 4-hour. And yeah, my entry was still active. And then I saw my trade, and okay, I was back in profits then, I think around 0.2%, and I decided to close the trade because we had already had here that daily selling zone slash pattern, daily head and shoulders, that could move our price more to the downside to tap this daily lows again for the daily natural M to play out. So we had here 0.2% net of gain because of the aggressively taken out partials. So this was then GBPAUD. Then I had a second entry on GBPAUD because we had now a pattern reset because we touched the daily zone again of interest, and we had that first candle, second candle, third candle, bullish candle close, and then we expect that fourth candle. So I was at my work, I had my entry set. I didn't calculate my lot size yet, so I needed to do that point on that time. So what I saw here was, okay, I calculated it on my forex book, and my entry was a little bit lower than normal. and then we went impulsively to the upside. We just didn't tap my 4-hour TP at this institutional candle here, like this, because this is my institutional candle where the price can reject on. So I went break even because I had already 1% running at that time here. So yeah, this was a break even for me. That's bad, but yeah, no problem. I just had a nice management of my trade. So the next pair is CHFJPY, and what we could see on CHFJPY, if I do it like this. So on the weekly chart, what we can see, we had here a weekly bearish candle close, so we can expect weekly bearish momentum till this institutional candle here. This was our first point that we can take some massively profits on, or where the price can kick up from to the upside. So we had that weekly bearish candle close at the beginning of the week, and then we went till the daily. So what I saw on the daily was, we'll just move this also, this one, like this. Okay, yes. So what I saw was, I had here that first leg, second leg, third leg, fourth leg, and then that possible fifth leg to the daily TP. So what I didn't take in count, because this was a trading error for me, we had here still that institutional candle here sitting for that larger bullish M that can hold the price up. So yeah, I didn't solve that immediately, so I went straight for the bearish W here. Eventually I could go and break even on the 4-hour, but yeah, I was at my work, and it's not always that easy to manage. So I went till the 4-hour then. But I will just go back to the daily, because I wanted to see here. Here was my daily zone of interest. Normally it's the whole candle, but we went till the daily highs, and then I adjusted till the upside. And on the 4-hour chart, we had here that break of structure here, that first 4-hour close below our higher low here. So we switched from bullish to bearish momentum. So I took my Fibonacci from the high to the low here. I wanted to enter at the shoulder 1 region. So at this zone, my stop loss above the 100, enough space between to the 4-hour TP. So then if I fast forward on the forward bottom, then we triggered and we went to the minus the 1% profit, so I could go and break even then. I didn't set the limit because it was so quick. Then I was at my work, so yeah. Then we went straight to the upside, minus 1.3% with the spreads. This was a loss for me, which I could prevent it, but it was so quick price action back then. And yeah, also the trading error of the daily. So you can see also that daily zone here was reacting from that daily institutional candle here. As you can see, this was acting as support and went straight to the upside. And if I take my Fibonacci here from the low to the high, you see that the daily minus 27 here got nicely rejected, and the sellers kicked in immediately. So yeah, this was a trading error. Nice lesson for me. So yeah, good. Then the last pair is gold euro. So what I saw on gold euro on the weekly was, we had here that bigger bearish W on the weekly chart for more downside momentum. We broke our lows here. We had here a weekly break of that weekly bearish candle close. So that was nice that we had a break also of that ascending major trend line, the break. So that's nice. We had here a descending trend line holding the price down. So yeah, it was looking nice. So what I did then on the daily, I went till the daily chart, because the weekly bearish candle close we have, this one. So I went till the daily chart, and what I could see was, we had here that major bearish W here. So I took my Fibonacci from the high to the low here, from the high to the low, yes. And yeah, I wanted to see where my daily supply and demand zone was. So my first structure here was this zone here. So I went to the candle chart and I saw this was an institutional candle between all the red candles. We have one blue candle, so it's very powerful to create such a candle. And I saw this was support. This was here support, support. This was again support. This was again support. This was again resistance. So it's a major supply and demand zone, which holds very nicely. So I went till the 4-hour chart. And at the 4-hour, what we could see was we had here already one touch. We went until this point of structure, no entry valid. Then we went again, no diesel. And then what we saw here was that bearish W. So that smaller bearish W here, that smaller one here. And then my limit setting at the beginning of correction because it's a very small one. And then we went to the downside. But the mistake I made was because it went so quick that close, I had an alert placed at the 4-hour bearish candle close here. And yeah, my daily TP was 12%. Normally, I take around 10 because it's so good looking trade. If it's so good looking, I will take 10% because sometimes it's yeah, it happens that it goes just through the daily TP. So yeah, it was 12%. I wanted 10, and then yeah, this was very nice aligning with the daily zone. So maybe I could place it above like this 9.5, and yeah, we went just out at the 12% like this here. So yeah, it's a stupid mistake from me that I made. But I was at my work. I was not so focused yet. Just needed to quick make a trade, and so yeah, that was a lesson for me. So then, if this trade was a 10% entry, then we had here our first take partials here for our TP around that point, like this for our TP. And that was done then for a 2.3%, 2.2%. So that must be 0.7% netto gain for that week because we are still in it. So yeah, so this was yeah, stupid mistake. I wanted to quickly handle. It must be quickly. So yeah, next time I can do better. But it was nicely forecasted and it was a nice trade eventually if I did the right things. So yeah, this was my week. 3% netto gain this week for my FTMO account. So yeah, nice. So see you next week, everyone. Take care. Bye.